10 years ago was the right time to buy Bitcoin. 15 years ago was the right time to buy Bitcoin. But it's always the right time to Bitcoin, because if you look at the power law gives you a very good sense of what that means. Like, for example, if you join today and you wait other 15 years, right? So if you double the time of existence of Bitcoin, so in 15 years from now, you basically get two, that is time that you're doubling, right? Two times, to the six. We are rounding it, we're rounding that growth to in time to the six. 2 to the 6 is 64. 64 times. You tell me where you get 64 times your investment using anything else. You don't get it.
Giovanni Santostasi is a neuroscientist, astrophysicist, and the original proponent of the Bitcoin power law model, which suggests that Bitcoin's price movements can be more accurately predicted by examining the relationship between price and time. The power law model has faced some criticisms in recent weeks. First, MicroStrategy Executive Chairman Michael Saylor, who recently announced during a Bitcoin conference that all Bitcoin models are completely invalidated. Then, popular Bitcoin analyst Plan B described the model as a bit too high and unstable, pointing out that while his Bitcoin stock-to-flow model predicts exponential returns for Bitcoin, Giovanni's time power law model suggests diminishing returns over the years. Joe Carlasari, who, according to his Twitter account, is a commercial litigator supporting Bitcoin, also recently made a tweet criticizing the model. The tweet reads, "Let's ignore the decades of academic research on power laws establishing that they are fully expected in many assets. They nearly always break down over time. They have no predictive ability, and power laws in markets occur as a natural result and are evidence that stock markets are indeed similar to other complex systems. That is to say, they just show user growth, which changes over time." In the midst of all these criticisms, Giovanni and other strong supporters of the model, including popular mathematician and Bitcoin enthusiast Fred Krueger, argue that the power law is not invalidated and is, in fact, the best scientific approach to estimating how Bitcoin will perform over the next few years. Saylor's argument against all models, including the power law, is that Bitcoin is simply too disruptive an asset to be pegged to a particular pattern or model. In his words, "All your models will be destroyed. They don't really make sense anymore. If you understand Bitcoin, you realize you have to throw them all away. When Godzilla walks on the playground, all your models are worthless. They are all going to be destroyed." During his speech, Saylor also estimated that Bitcoin will grow at a 24% compounded annual growth rate over the next few years. Krueger counters Saylor's anti-model arguments by stating that a model like the Bitcoin power law is still a great way to estimate how Bitcoin's price will grow over the next decades. In his response, Saylor's 24% estimate is rough and cannot be compared to the power law's data. "You can definitely model Godzilla," Krueger wrote, in response to Saylor's remarks about models. "He has been stomping around now for 15 years. Bitcoin will grow at 24% compounded annual growth rate is, in fact, a rough model." The actual data says the following. The Krueger is closer to 44%. The Krueger is on a path to decrease to 34% within a decade and 24% within 2. In a recent interview with Simply Bitcoin, Giovanni explains exactly why the power law model is superior and how it establishes 64 to 150 X gains on Bitcoin investments over the 15 years. As we bring you clips from the interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks, and enjoy the video.
Let me explain this concept of scaling variance. That people hear this term and they get turned off. It's a very, very simple concept. The concept is, take a child, for example. Look at how a child grows. Those the child grows, in the beginning, we have huge, big heads, right? This is why we are so cute. And there are reasons, right? There are reasons because of that. Because the brain needs to be big from the start, right? To do a bunch of things, etc. And so this is why we get born with these huge, big heads. It's the biggest that you can have and still being born normally. But the child grows and its limbs, every single little part, right now, it goes through a period where other things are happening, very fast. But in general, it grows proportionally. So scale invariance means everything goes up proportional. What is proportional for Bitcoin? The change in price when looked from a scale point of view. And what do I mean for scale? Right? In science, we have this terminology. It's not a difficult concept. Scale means 10, 100, 1,000, 10,000. So if you're looking at the price of Bitcoin, not when it changes from 10 to 20, 25 to 100, 100 to 125 to 100, but if you look at how Bitcoin changed, every time it went up by a factor of 10, and then you compare the time, you can see that the change in this scale is proportional to the change in time. In other words, it took like a few days to go from, a fraction of a dollar to a dollar. It took a few weeks to go from a dollar to $10. It took several months to go from 10 to 1,000. The power law should give you a lot of confidence, right? Now, every investment, of course, has risk, Bitcoin included. When you look, you never look at risk by itself, right? You look at the ratio between rewards and risks, right? Risk and rewards. So the risk here, if you understand the power law, it's nobody can say it's zero because you should go to jail if you say that, but it's very, very, very small, in particular with all the other things that are happening, the institution adopting it, nations adopting it, and so on and so on. So the risk is very, very small. One maybe can calculate, maybe something that, me and Fred and somebody else can come up and compare the risk of Bitcoin. Now you can do it with many different ways, the Sharpie or many other things. We can calculate it, but I will say that it is very, very small. The rewards are immense because we are not, even now, of course, yes, in the beginning, because of that factor, remember I told you, it's like you're dividing by a dampening factor over time. That is where the diminishing returns come. 10 years ago was the right time to buy Bitcoin. 15 years ago was the right time to buy Bitcoin. But it's always the right time to Bitcoin because if you look at the power law gives you a very good sense of what that means. Like, for example, if you join today and you wait other 15 years, right? So if you double the time of existence of Bitcoin, so in 15 years from now, you basically get two, that is time that you're doubling, right? 2 times, 2 the 6. We're running that growth to in time to the 6. 2 to the 6 is 64. 64 times. You tell me where you get 64 times your investment using anything else. You don't get it, okay, in 15 years. So it is, for a young person in particular, it's nothing, because I can assure you, if you are in your 20s or 30s, 15 years fly, okay? They fly incredibly. Like in 15 years from now, you say, where the heck these 15 years went, okay? And at the same time, you look at your wallet, your Bitcoin wallet, and you are okay, because 64 times your whatever you invest in now.
According to Giovanni, scale invariance is one of the most often misunderstood features of the power law model. However, it is a powerful feature that can be used to make predictions about every system governed by power laws, in this case, Bitcoin. Using this tool, Giovanni estimates that it will take about 10 years for Bitcoin to hit $1 million per coin. The astrophysicist also believes that scale invariance allows us to understand the role and importance of events like the recent approval of several spot Bitcoin ETFs, which has allowed thousands of retail and institutional investors to invest in the leading crypto asset. According to Giovanni, scale invariance tells us these events will not dramatically affect the price trajectory of Bitcoin, but that they are critical events necessary for the asset to continue in its scale invariant growth. So, the Bitcoin power law does not change, because billions of dollars are now flowing into Bitcoin through the ETFs. The expansion of the network has always been a part of the model. During his interview with Simply Bitcoin, Giovanni suggests an aggressive strategy for younger Bitcoin investors with a long-term time horizon. He believes this strategy will get you 100 to 150 times your initial investment after 15 years. Here are more clips from the interview.
I suggest, in particular to the young people, to do a little bit more aggressive move, because if you start, you have to be also honest. If you have only $300 a month that you're putting on Bitcoin, you should do it, right? You do DCA, do this on a continuous basis. But to be honest, yes, you will be in a good place in 15 years, but you're not going to be a millionaire. And we can try to do the calculations. I think I did it a few times. You're not quite ready for retirement. One of the things you can do, please understand what I mean here. I'm not trying to tell you to do anything crazy or anything absurd. You can use the power law to identify these cycles. Now, one has to understand why the power law is based on thousands of data points and very solid principle. What I'm telling you next is based on what Bitcoin did in terms of cycles, because there are two behaviors. There is this long-term trajectory, and then there are these cycles. These cycles are very predictable. They are happening every 4 years. The top happens at a certain time, etc. So, but you understand that making stat using 3 data points, it's almost irresponsible. But it's all what we have. Okay, so under the assumption that these cycles continue, and I think I have also very solid scientific arguments why they continue, that we can discuss now another time, or people can read more of my work. If this cycle continues, then you can try to be a little bit more aggressive. And what do I mean with that? In a very well thought way, decided ahead and say, okay, I'm going to take 10%, 20%. I will not go more than 50%. 50%, I think it's a pretty aggressive and kind of balanced approach. But 10%, nothing wrong, okay? You take 10% of your asset, sell it when it's red. And how did I get this chart? I got this chart by taking deviations from the power law. So the power law basically will be the red flat line. So it's 0 because I'm taking it off, right? So it's everything relatively to the trend. So you take and draw the price of Bitcoin, and you can identify very precise areas when it's a very good idea to buy, that are this green area. We can do even better. I can have other ways where we can almost zoom in on the bottom itself. But even if you just do it in a very simple way, where you say, okay, anything below this amount of deviation, it's a good buy. Everything above, it's a place where maybe I should take some gains, right? I should sell a little bit of my Bitcoin with the idea that you want to buy back at the bottom, right? You save it, you don't spend it, you don't do anything stupid, you wait until you go back in the green area. If you do this, now we are not talking anymore about 64. I did a calculation that is an extreme calculation, understand it, right? Like, what is the best possible scenario? And then you have to go down from that and multiply by some kind of factor, right? Alpha, 10%, whatever, that explain both your commitment to this approach and inefficiency, because we're never going to get 100% right. But if you got it 100% right, again, based under this assumption that everything repeats the same, we are talking about 1,200 pair. That is how much Bitcoin has left if this cycle continues, okay? So now, of course, you're not going to get 1,200. Do it. What about 50% that? What about 10% that? So in other words, you don't get any more 64 if you are a little bit more aggressive and you try to understand these cycles, and you do it with awareness, with carefulness, without doing anything degen. Maybe you get 100, maybe you get 150. But again, in 15 years, it's not crazy. It's completely crazy in terms of investment. There is nothing like that.
Krueger perfectly sums up the power law model and its predictions in a recent post he made on Twitter. The post reads, "What specifically can we learn from the power law model? Here's my list. Bitcoin is roughly on a trendline growth of 43% annually. This growth is going to slow down to 30% in a decade. The standard deviation of this growth is plus 2x down to 0.5x in a year. Sometimes you overshoot 2 standard deviations. To the upside, 2017 and December 2020. There are no cases of going below 1 standard deviation on the downside. 2022 is within the model. The model definitely would suggest lightening up if we get to 200K this year, and a lot if we get to 400K. The model would suggest adding more if we get to 50K by the end of 2024. The model does not predict $1 million inside of 4 years, even with ETFs. The model does not put any explanatory power on stock to flow or scarcity. The model is completely independent of the Fed, interest rates, debt, or macro. These things don't matter. Compared to other models, especially Plan B's stock-to-flow, the power law model is certainly conservative. Which of the models do you prefer? Or do you agree with Saylor's assumptions that all models have been invalidated? Please share your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and turn on post notifications for more videos like this. Thanks for watching.